Right, good afternoon then, folks, as we head into US trade on Wednesday, the 19th of July. We'll look across markets to see what's going on. Obviously, we have digested the UK inflation figures of this morning, lower across the board, which has sent the pound tumbling and has sent the FTSE higher. Yields on government bonds as well lower, which has further driven that price action on sterling and on the FTSE. So expectations for interest rates not as high or expectations for interest rates to reach as high as markets had initially anticipated are not where they were at. The expectations for rate hikes have cooled down slightly over the course of today in terms of money markets pricing that in. Andrew Bailey has obviously breathed a bit of a sigh of relief, but it's not all sunshine and rainbows in terms of the UK economy by any stretch of the imagination. Inflation still 4 times more than the Bank of England's target rate, but we broke that down in a bit of detail earlier on. But we can see US stocks today. We've got Tesla and Nasdaq earnings out, the two big hitters in terms of today's earnings. We had a number of banks out. A number of banks, posting positive earnings. Goldman Sachs relatively in the middle, kind of a couple of positive things, a couple of negative things. Nothing too much to see there, but a couple of the smaller banks that some market participants were slightly worried about, obviously due to the collapsing of a number of the banks earlier on in the year. A lot of those smaller banks, the more kind of lending focused banks, have fared well over the course of Q2. So something definitely to keep an eye on, going forward. Some positive earnings out to begin with. Maybe that continues on the rest of this week and into tomorrow. But those Tesla and Nasdaq earnings a little bit later on today, something definitely worth keeping an eye on as we head into the rest of the week's trading. Obviously, the weighting they have towards the stock indexes is quite high, and tech stocks, the Nasdaq in particular, has rallied harder than any of the other stock indexes. Obviously, due to the AI boom, the tech boom over the course of this year so far, with all the AI, ChatGPT, and all that sort of stuff, proving supportive for that side of the stock market. Now, missing earnings in Tesla and Netflix and some of these bigger companies, it's a bit of an overcrowded trade at the moment. It is the most overcrowded trade of this year so far. So some negative earnings should probably cause some volatility in the Nasdaq, which may create some opportunities to short some stocks coming up. But the trend is still higher, certainly across the S&P. That's the side of the fence you'd probably favor sitting on as of now. We'll jump across to the grid and see what's going on. We can see US equity futures mixed, European mixed, Asia Pacific mixed. The FTSE is obviously outlier with that 1.56% gain so far in this trading session today. Commodities relatively mixed. Oil up slightly. Oil up slightly. I mean, it's not really up too much, kind of going in line with the trend with the reducement of supply from another number of countries. That's what's kind of going on at the moment. Does that continue? Obviously remains to be seen. But Brent up at 80, crude back at 76, bit of a bounce back in the terms of the price of oil, but not too much. Really, movement 0.5% is not much movement in terms of the price of WTI. Sorry, US bonds, you can see bond yields lower across the board, likely due to the fact that those UK bonds the yield on those UK bonds had pushed lower off the back of those inflation prints this morning. So something to keep an eye on. Yields lower has normally sparked stock upside, which isn't really being replicated as of now. So that's something of note. Yields down has normally meant stocks up over the last number of weeks. So yeah, the fact that is not playing ball today, maybe that's a sign of things to come going forward. But the US dollar higher across the board, sterling lower across the board. Dollar, we were expecting a bounce back a little bit earlier on in the week, which we obviously alluded to in recent videos. And this sterling has been hammered across the board, as you can see, down a full percent across the majority of these currency pairs. Certainly no respite in today's trading session for the price of sterling. You can see obviously these inflation figures lower across the board, but these figures out of the US that have come out, these building permits lower than consensus, lower than previous. These housing starts lower than consensus, lower than previous. Housing starts in terms of the percentage, monthly percentage, down 8%. Building permits down 3.7% after relatively strong figures, or extremely strong figures last month. Now, negative data yesterday in terms of the retail sales helped push stocks higher, as again it further dampens expectations for the Fed to continue hiking interest rates after next week. This again is another print that will contribute to that. So, do stocks push higher in today's session? Yesterday's figures push stocks higher. Do today's negative figures push stocks higher? We'll obviously have to see, but stock indexes today are relatively flat across the board. You can see as we jump across to the US dollar, or the price of the US dollar, a bit of downside is what we are looking at across the dollar block, with your Aussie, Kiwi, Euro and Sterling all pushing lower across the course of the day. Dollar Swiss relatively sideways, but dollar yen pushing higher. Dollar CAD not doing too much, but this euro dollar I think is an interesting chart to keep an eye on over the course of today's session. Obviously we've got this across here chopping sideways, but we do have this bit of a level now to the downside. The price is making an attempt lower towards, you got a few lows in there to keep an eye on, 4 or 5 different attempts at this level. If you do get a breakdown through this level and a deterioration, certainly in terms of a technical deterioration, that would open scope for a further pullback, which is probably needed. I think this rally is a bit overdone, a bit overcooked, and that lower should certainly make an attempt of 111.30, maybe even possibly attempt at 110.20. But a move lower on this should spark a fresh wave of dollar buying, which selling cable then doesn't seem like a bad idea as well. This dollar index that we've had a look at has posted a bit of a double bottom. You've got up through the neckline of this double bottom, and that is a known bullish reversal pattern, having a little retest of that level now. On this level back to 101, what we had mentioned previously at the beginning of this week, a pullback back to that 101 did not seem out of the realms of possibilities, and that is potentially what we are looking at. All these lows across here touching off 101, if we can get a pullback back into that 101, I think would help spark a fresh wave of downside. But if we just break down this chart a little bit and just have a bit of a look, we did have a bit of a descending triangle, a longer term descending triangle that did break out. You got this down to the downside. If you are technically inclined, that big weekly descending triangle did play out, and a retest of the lows of that pattern would also be 101. So a move back to 101 and then look for fresh downside, I think maybe a decent way to play it in the coming days, possibly weeks ahead. So keep an eye on that. Bit of a short-term bounce back at 101 level, probably look to initiate fresh sells. Nothing across US stock index, across the S&P, the Dow, the Nasdaq and the Russell. Didn't need much of a pullback yesterday to go rallying again. Do we need much of a pullback now? Struggle to imagine they sustain much upside in the lead up to Netflix and Tesla earnings, but positive earnings from those two companies, couple the fact that slightly weaker data causes the Fed to no longer look at interest rate hikes, or potentially no longer look at interest rate hikes, reason for stock upside. But any significant misses on Tesla and Netflix, probably some Nasdaq shorts wouldn't be too bad of an idea. But the FTSE continues higher, obviously what we've alluded to this morning, and everything else relatively unchanged. You can see oil making an attempt through these highs. Higher oil price will continue to put pressure on inflation, so markets will not want that, or central banks will not want that too much higher, but it seems like it wants to go up and test that 77.30 level that we did reach back on Thursday of last week. Apart from that, it's really where we're at in terms of markets. Netflix and Tesla will dominate the headlines later on this afternoon. Stock indexes will be in focus, but those UK related assets have been moving over the course of today. Things we need to keep an eye on. This VIX as well, just before I mention it, this VIX making an attempt at these lows. If the VIX does get through these lows and makes an attempt down at 13, down 12.50, that could potentially spark another rally higher in stocks. So could go either way in terms of stocks. Not great analysis really to just sit there and say it could go either way. Personally, I'm a believer that the trend is your friend. Long stocks, no matter what you think, over the long run, does play out in profitability. So keep an eye on those stocks, even if you're long, somewhat almost deludedly long. Not the worst of ideas heading into any trading session, but Netflix and Tesla will dominate headlines as we head on through the rest of today, and that's what we need to keep an eye on over the course of today's US trading session.